I think once Washington decided that chips were a strategic commodity and one that needed to be made inside the United States, okay, then it took the next step. Then it decided it needed to make bets. It needed to be sort of in the horse betting business. And once it decided that, it had to bet on Intel because Intel designs and manufactures chips. Now, that doesn't guarantee that company's success, obviously, though obviously it's a little too soon to tell the impact of these subsidies, other than they will cause more plant construction in the United States. We have to see it over the course of a whole business cycle. But listen, when you're investing not for market efficiency, but for other reasons, geopolitical reasons,
but do you, Jimmy,
shouldn't necessarily expect that to be an efficient investment.
Well, and so I think, listen, on the margin, is this investment worth making sure that, we don't have to be overly reliant on Taiwan, all the geopolitical implications of that? Sure, absolutely, or China, you name it. However, are we risking making Intel a worse company than a better one? I mean, I think that's a little bit of the question hanging in the air right now, which is, does it need market discipline to kind of catch up, make sure they're making the right investments and so on? And are we right now risking propping them up and creating a less efficient, less useful company in the long run?
Right. Well, I mean, I think that if you're going to balance off the two sides, on the good side, you're going to maybe ensure more of these chips are made in the United States. But on the other side, you're to some degree, you're shielding this company from competitive forces. It's not fully making decisions based on sort of the fiscal situation without the government's having any role. So it's not a purely business decision. And are you creating fundamentally over the long term kind of a zombie company that would not exist at some point in the future if not for government? You don't want that. But could that happen? Clearly, Intel, at least as Washington sees it right now, is a too important company to fail. I'm not saying it's about to fail,
right,
but that's sort of the position it's placed it in.
Right. We don't want to call this a bailout either, but when the best way to frame it would be a position of strength, something akin to World War II, mobilizing industry to build ships at a massive rate and all that. I mean, we've done incredible things when we've had a specific mission and a goal here. Can that be copied with success in this case, do you think?
Well, listen, a lot of people in this country have been looking at China's success and subsidies. China has not done a good job with massive subsidies, creating its own domestic advanced chip making industry. And they spent a lot of money. I think that's a lesson we should think about. And, you mentioned bailouts again. We're not talking about a bailout, but I have little doubt if it came to that, again, given that they view this as a strategic commodity and now a strategic company. Yeah, I think they would absolutely bail out Intel, just as we bailed out the automakers back in 2008.
Right. And then the question again becomes to make sure, how do they keep up with market forces, get ahead of them quick? The fact it's notable today, AMD and
Subsidies don't create a nimble company.
No,
Subsidies
they don't.
do not create a nimble company.
No. And we have rivals using, of course, outsourced technology that are able to grow and flourish and power AI and all the next generation of technologies in the meantime. We'll have more next hour. Jimmy, we'll leave it there for now. We appreciate your time today.